Welcome to Dental All Stars. I'm Alex Nottingham, founder and CEO of All Star Dental Academy. And with me is Chris Cuadros, founder and lead CPA at Crossroads Tax Advisors. Our topic is tax savings opportunities. Please welcome Chris.
Thanks for having me.
We were having fun getting our streaming set up in multiple locations. So we'll see how that is working. It's not just doing a podcast is enough. Let's stream at the same time.
Yeah,
so Chris,
you're always good about taking everything to the next level, right, Alex?
Next level. Got to experiment. If it ain't broke, break it. Try some new things. So Chris, I've been very impressed talking with you. You've been at multiple events that we do, the Practice Growth Summit and others. And I was just really impressed with all your knowledge as a CPA and tax advisor, because as our listeners, mostly dentists and other entrepreneurs, is we don't want to pay more taxes than we have to. Right. So give us a little background about yourself, and then kind of bring us into this discussion of taxes and how can we save? What are some tax savings that we can do?
Yes, absolutely. I appreciate it, Alex. And yeah, just a little bit of history about Crossroads Tax Advisors and myself is, we started, it was back in 08, 09, and not a result of the crash back then. It was just life happened to evolve us into to the dental arena at that point. And it just happened to be that, the more that I learned about the dental industry, learned that dentists are good people and they work hard and they just need help running their practices from a financial standpoint. And so we kind of worked reverse from the typical CPA firm out there. And that's because we looked at the processes and tried to work backwards to figure out how can we make the working relationship easier with the dentists all across the country and still be able to provide the financials in a timely manner, be proactive from a tax perspective, and then from a team aspect, to be able to help every members of whoever the dentist team, whether that's financial planner, practice management consultant, the attorneys, whoever else is involved, a lot of the decisions and being proactive from their line of services stems from where a good, clear, and timely overhead or the profit and loss and the balance sheet statements. And so we kind of worked backwards of how can we solve these problems for the dental community instead of, hey, we've got a lot of dental clients and we're going to say that we're a dental CPA firm right now.
Excellent.
Does that make sense?
Complete sense. Sometimes, right, we don't always we talk about your origin story. It's not always, how we imagine it, but you roll with it and it works out where there's a need and you solve it. Well, there's a need to not pay more taxes than you have to. And I remember we were talking about this the other day, and you gave this beautiful framework in terms of tax savings and just running your business. And I love to hear about it. 3, 4, 5 points, whatever it is. Let's hear those tax savings.
Absolutely. And keep in mind, these are some ideas that may or may not fit whatever is going on in your practice. You may lease or you may own the real estate. That's some opportunities. You may have kids, you may not. And so a lot of these are just some general ideas that we see a lot of our clients take advantage of. And so just wanted to communicate, with you, Alex, and your friends here on the podcast. But, it really does get back to where is the financials and where is a good, clear picture of where your overhead is. And so in order to implement any of these, you obviously need the cash in order to deploy some of these strategies. And so definitely just trying to bring some ideas to the table, but it's also what can you afford? And so that's where it comes into the accounting process is, that's really very important. That's going to drive a lot of our decisions. But to get into some of the ideas is one is the cleanest and easiest is a retirement plan. And so what that means for everybody is a little different, right? Whether you have an organized or a structured plan in place in the practice. If not, then you can still contribute to a Roth IRA, traditional IRA, and so forth. Once you get into the group plans within the practice, that's where you get into either a simple IRA, and that's with up to a 3% match. And the other alternative would be a 401k, where your deferral limits increase significantly, and you've got a lot more room for creative retirement plan strategies to be implemented. One is the profit sharing plan. So we always explain the 401k as kind of, there's three buckets. One is the deferrals, one is either the match or the safe harbor, and then the third is the profit sharing plan. Now, keep in mind, there's a lot of other bells and whistles that you can attach to those, and that's why the 401k can be very creative and very beneficial for the practice owners. There's one thing that's called even a cash balance plan that is essentially a pension plan piggybacked off of the 401k plan. But again, you've got to have high profits and high cash flow in order to make those happen. Or even on the flip side, just control your living and be able to afford some of these strategies outside of your just normal living expenses. And so, one would be the retirement plan. Like I said, cleanest and easiest.
It's a no-brainer.
Right. And keep in mind, it's going to be a few $1,000s, but that's where it makes sense, I guess, at the end of the day. If
you're talking about in managing the 401k. So you're talking about?
So you have to have a TPA or a third-party administrator, and they're basically going to report all of the deferrals, everything, all of the details to the IRS for each year. So it's kind of like a tax return, but specifically to a 401k, and it's to the IRS. And then you have to have somebody that's what's called a fiduciary in there as well, and somebody to manage that money. So like I said, there's a little bit more complexity, but it can be definitely beneficial.
Yeah, and I think there's kind of the stages. Like you start with your Roth, then you start with, and you can't do Roth, then you can do a backdoor Roth, which you still could do. And then moving up to is a 401k where you can defer and then your company can provide contributions, and you need some sort of administration, as you're talking about, to do that, which is a great way of maximizing your retirement. And like you said, you can go further and you have pension situations, but there's a certain limit though that you can go to. That's step one, is maximize any retirement benefits the government allows you with respect to that. And I think what's nice about you as well is looking at that and trying to keep the cost down with respect to administrators, because some of them are more expensive than others, and we don't want to spend more than we have to, right?
Right, for sure. And sometimes you do get what you pay for, though. So
that's a good
lot
point.
of times there is a cheaper, let's just say Vanguard, buttoned up approach, and it's really just a template. That may or may not work in some regards, but if I prefer to spend a little bit more money and have that plan customized for you. And so I think that spending a couple $1,000s up front will definitely yield better results down the road, and it's going to pay off. But
that makes sense.
I said, every situation is a little different.
And it's interesting, a lot of those plans, the ones that are less expensive, there's less you can do with them, and you may not apply. Like if you have employees, these simple 401ks and so on, if you have multiple employees in your business, which most dentists do, those won't work. So you're going to have to get one that has administration and so on. It's going to cost more money. But again, you pay it for yourself or you pay it to the government. That's your choice. Okay, so that's pretty straight.
Staff tax or the income tax.
Right, you're going to get you somewhere. So okay, so 401k, that's one bucket.
Yes,
in retirement.
Yeah. And then, even then this kind of sparks different conversations of what is the ideal W-2. And so,
Oh,
this
interesting.
is where, the difference between Crossroads tax advisors, and I mean, you can find a bookkeeper and a tax preparer anywhere, right? But what we try to do is take a more holistic approach and consider things that you should. So, for example, we see a lot of W-2s be very low because if you're an S corporation, you have to check the box with a reasonable compensation. The lower your W-2 is, the more that you save on payroll taxes. No doubt about it, right?
Right.
But it's kind of inverse relationship with the retirement plan. The higher the W-2 will typically yield better retirement plan results. So we have to kind of weigh what is
Because you
where's
have to have a certain W-2 to allow you to max out, right? The 401k. You can't be too limited.
right. Yeah, so there's kind of a sweet spot, and
Okay.
it can go anywhere from whatever the bottom the barrel is, the basement of that W-2, up to a limit that is set by the IRS. It's every year. So for 2024, that number is 200.
We have a caller. Let's see what any
Right.
questions? Hey, we're doing Facebook Live and LinkedIn Live and so on. So we had to get a caller come in. But we're busy right now. We'll answer that later. Go ahead.
Apologize. Yeah, I thought I had all the phones
No,
on do not
no,
disturb.
they're streaming. They have a question. So
And so, that strategy, if there's a CPA out there that is taking, just a myopic look of my value is to save payroll taxes to you, well, then I'm going to bring that W-2 very low. Like I said, we take more of a holistic approach and big picture. That's yes, it's and we're going to help quantify that, right? So if you bump your salary up to $345,000, you're going to pay X amount of payroll taxes versus this is the benefit that you get. And so, like I said, we're just trying to make it easy to understand, educate our clients is what's best for you. And if retirement plan savings is high up there, like I said, it's one of the cleanest and easiest ways to save on taxes. I should say defer on taxes because you're eventually going to pay those taxes. It's just a matter of when.
if you're doing the pre-tax method,
Correct.
and some can do, I think with 401k, you can also do the Roth method where you pay it now and then, which that
Yes.
always hurts, but that can be done too. Got it.
Yes, great point. And so, but like I said, we work very closely with the TPAs, with the retirement or the financial advisors to try to figure out what's going to be the best scenario, given what the cash flow is from the practice and given what the goals are for the client. So, like I said, these are just some of the ideas that we come up with. Another one is kids on payroll. That's a super easy one if you have kids, to shift money from your high tax bracket down to theirs, which is zero, up to $14,000, whatever the standard deduction is for that year. So
Okay.
this year it's $14,000, and a lot of times we'll have some folks come in and, hey, well, I had a kid last year. He's 1 or 2 years old now. Can we put him on payroll? Like, well, that's kind of pushing
That's a
it.
bit of the balance. Yeah.
Right. So this is a question of how aggressive do you want to be? And so, we had one client put a 6-year-old on payroll. And so we got a call from the Department of Labor asking for their job description. Right. And so, like I said, it's kind of how aggressive do
And
you
there's
want to
also child labor laws you have to look at in
be?
terms
Right.
of your state and what the expectation is. So, and what I hear what you saying, which is nice, is you're going to customize. It's like also as you invest in the stock market or so on, you're going to have a certain level of aggression or conservative perspective, and your
Right.
advisor is going to have to work with you within the realm of it. So there's no one way of doing it, but you're right. I mean, that's cool. So you can go up to the standard deduction, so they're not really paying taxes per se,
Right.
much of it, but and you can jump that into, who would you put that for the child? That money will go into their Roth IRA or
Yes.
something like that. Okay.
Yeah, that's a great point, Alex. And kind of step one is to put them on payroll, but then now that opens up the door for opportunities for them to start contributing to the Roth, because you have to have earned income in order to contribute
I
to a
see.
Roth. And so then now putting them on payroll, it does kind of do some double duty, and it shifts income down to zero, but then it also opens that door for opportunity. And this is just building wealth at the end of the day.
Sure.
But but it's also assuming that the cash flow from the practice and at home permits that. And so,
And I like what you said earlier. We kind of glossed over it. It can be a whole other topic is living below your means and being mindful of what you spend. Because what is is it Parkinson's law or is it another law? Maybe it's Parkinson's law that as you make more money, your expenses grow to that amount that you make. And so we
right.
have to be mindful of it in terms of when we unleash more spending with respect to that. So wealth is not just making money, it's also saving money or not spending money. All right. So the second is consider your child as well as for their own income and
Yes.
just be mindful of child labor laws with respect to that, because you don't want to get a call like, what is a 6-year-old doing? Very, very well done. All right. So what's our third, Chris?
Third, and we've got a lot of calls for this year for some reason, is just called the Augusta Rule, and
Okay.
it's nothing new. It's been around, I believe, since the 70s, and so basically what that does is allow you to quote unquote rent your house for up to 14 days rent free. And so, obviously, you're starting to go cha-ching, right?
Rent your house
And
14 days rent free.
yes, you can rent, and this stems from Augusta, Georgia, where they would have the Masters there, and people would rent their house out, and the tournament was only a week long ish, and so that's where kind of the 14 days comes in. The IRS says you can rent out your primary or vacation home. And this includes, I guess, boats and motor homes too, if that can qualify as a vacation home. It has to have a sink and it has to have a restroom facility in order to qualify for that. But I got off on a tangent here, Alex. So but it's mainly your primary home. And so what are some of the things that you could do to quote unquote rent out your house? And if you are having staff meetings at your house, that's one. You could have a board of directors meeting at your house. And so, if your spouse and your kids now are on payroll, well, that increases the quote unquote team members that are attending, right? And so how you go about it now is that you have to justify whatever the cost is. We can't just say, well, my house I rent it out for $25,000 a day. I mean, everybody would like to do that, but in case of an audit, this is where we want to have some support. Now, a little bit of strategery here and for you, and strategic moves is go on a holiday weekend. So we've got 4th of July coming up here soon.
Okay.
Go to Airbnb, and when the prices for homes in your area are peaked, and try to get a snapshot of what a home comparable to yours would be in a holiday weekend. Now you've got a little bit of a higher baseline. And so let's just say that's $1,500 a night. Let's just say. And so then now you can do 1,500 times up to 14. So there's 12 months in a year, let's say, that you do it monthly. And so there's 12, one staff meeting per month at your house for $1,500 per night.
Is this different? Is this different than just writing off a percentage of your house for home office?
Yes. This is different because now your home office, it's difficult for dentists
to do that. I'm saying
right,
for entrepreneurs that have, now, if you are a dentist and you have a second business as an entrepreneurial business, speaking, consulting, and so on, then you could rent a part of your house for that business. So you're saying in addition, if you don't have that capability, you're saying 14 total days in a year that you can get market rate for the day, and saying that your business, this is off your personal taxes, right? Is what you're saying? So you're
correct.
Now, what does this mean? You're getting income. So it's expense from your dental business or your entrepreneurial business and to the person. And then, so it's income to you, right?
Right.
And an expense off the business.
Correct. And it's tax-free for
tax
up to
14 days.
Free.
Oh,
yes.
I like to hear that. Wow.
Right.
You just paid for yourself right there. You see, you get what you pay for.
It's no different than if you were to host this staff meeting at a local, or I guess what's the word I'm looking for? Just some place to restaurant or whatever. Like you're going to rent a room, you're going to rent a venue. Well, this is no different than you're just renting your house as the
And
venue
you're saying you're
for.
having a meeting for your team or some officers of the team, yourself and maybe a spouse, something that's being done. Very, very clever, Chris. Wow. That's cool.
Yeah. And so I don't know,
Huh.
like I said, we've had a lot of folks, asking about this, like I said, it's nothing new. It's just that I guess people are, everything, I
New.
feel like
I've never
everything's
heard
great.
of it. I
Really.
mean, it's not new, but you're able to think it's outside the box.
Yeah.
It's very, wow, very, very interesting. Augusta, or remember the master's rule, okay,
Yes.
to
Yeah,
renting out your house. Very, very interesting.
for sure.
Um,
So
what
we've
else we
got
got?
retirement plan, we've got
Retirement.
kids, we've got the Augusta rule, and
Uh-huh.
then probably the fourth one is it's called PTE, or the pass through entity tax.
Okay.
And that is potentially going to be off the table next year of 2025.
Okay.
So if we roll back the calendar a few years, and that's where the SALT, or sales and local taxes, were limited on your personal tax return,
Mm-hmm.
so to $10,000. So any real estate taxes, state income taxes, personal property taxes, all of that was limited to $10,000. And so for most of our clients, they paid well in excess of that, just on their income taxes alone, much less you add in real estate taxes and so forth. So the states have come up with a way to combat that now, but it has to be what's called a pass-through entity. So S corporation or a partnership. So if you are a single member LLC operating as a sole proprietor, there's no pass through. If it's a C corp, there's nothing to pass through. So it's S corporation and a partnership are considered pass through. And what this does is basically your estimated quarterly taxes now which would normally be paid on a quarterly basis to the state. Now that's paid by the practice to the states. So it's a deduction on your practice financials and your practice tax return, but it's essentially state taxes paid on your behalf. Now, Alex, you in Florida, you don't have to worry about this, right? But there's a lot of other states out there that do have to worry about it, and so this is where the pass-through entity tax is a percent of the income at the end of the day, and then it will allow you to essentially pay taxes for your shareholders, which in most case is 100% toward for our client, the dentist. Does that make sense?
It does. It does.
All right. Like I said, it could be something that is going to go away next year, which is it's the SALT limitations are set currently going to sunset the end of 2025. So as everybody knows, there's an election going on this year. Who knows what's going to happen with whoever wins it, right? And so this is all subject to change. But
This is the
for 2024,
2024 tax tips
2025,
from
yes,
Chris over at Crossroads, and then 2025 we'll find out what else we got in store.
yes, sir. And
No federal income tax. That was one that was proposed.
yeah, I'd love to see that. um, So, and then lastly, for anybody that owns the real estate out there, which, we've kind of 50-50 on who owns real estate, who doesn't. But if you do, then now you have the opportunity for what's called a cost segregation study. And basically, that is going to break out all of the building into smaller components, which are typically going to be depreciated over shorter lives. So right now, your building is depreciating at 39 years, most likely. And so that is going to break it down into 5, 7, 10, 15-year property, which is then now subject to Section 179 and or bonus benefits. So it can be very lucrative or beneficial for anybody, especially if you are going through any type of renovation. And, kind of my break even is about $300,000 for renovation. And so because it does cost more money to hire a engineer and CPA firm in order to do this, we don't do this in house either, just because it's such a specialty, and it takes site studies, and it's a 20-30 page document that if audited, the IRS will want that in order to prove, hey, you spent, $500,000 here, and now you're going to recognize all of this depreciation. We want to make sure that everything is legit. And so that's why it's important to hire a cost segregation firm in order to do that, in order to pass an audit. But I could talk some numbers, but it's kind of tough to talk numbers, I guess, over a podcast or a video like this, and without some kind of illustrations. But it can be very lucrative, beneficial for property owners.
I have to say, of all the accountants and tax people that I've met, I've never met a more creative mind than you, Chris. I mean,
Well,
very creative and ethical.
yes.
I've met some people that are a little off the chain ethical, but you have a great reputation in dentistry, very ethical, and some great ideas. For the listeners that want to learn more about you and your services, how do they reach out to you?
Yes. So you can just text our main line. It's info@crossroadstax.com, or our main line is area code 317-884-3136. And just for ask for Jason. He is our director of business development. His specific, or I guess direct email too, is Jason, JASON, @crossroadstax.com. And for all of our friends at All Star Dental, we do offer a complimentary dental checkup, so to speak, dental CPA checkup. And so we will just take a look at what your current processes are and taxes, and see if there's any recommendations. And so, we are we just like to help the dental community. And if this helps you sleep at night knowing that you're checking all the boxes, awesome. We want you to walk away from that experience saying, either yes or no, that Crossroads is a good fit. We want you to walk away with that being very valuable for a tool for you, and walk away with some good ideas.
And you specialize in dentistry, but anybody you can help?
Yes,
Any entrepreneur?
within the
Within
healthcare industry.
healthcare is your specialty, because we have a lot of entrepreneurs and medical doctors as well that follow us all over. So excellent. Thank you, Chris Cuadros, Crossroads Tax Advisors. And thank everybody for joining us live. We did some live, and as well as listening to the podcast afterwards. Remember to follow us on Apple Podcasts, Spotify, and YouTube. Get the episodes as they are released. Share with your friends. And until next time, go out there and be an all-star.